In March 2024, NVIDIA's market cap hit $2.2 trillion. Microsoft announced a $100 billion investment in artificial intelligence infrastructure. Google, Amazon, Alibaba, and Tencent entered a spending arms race that would eclipse anything we've seen since the space race. Wall Street called it the fourth industrial revolution. But there's something they're not telling you. The AI boom isn't just burning through investor money, it's burning through something far more finite. And the math, it just doesn't add up. This is the story of how the greatest technological revolution of our time might be built on foundations that are already cracking. Let's rewind to 1999. The dot-com bubble was at its peak. Companies with no revenue were worth billions. Pets.com spent millions on Super Bowl ads. The logic was simple. The internet changes everything, so any internet company must be valuable. Then reality hit. Between 2000 and 2002, $5 trillion in market value evaporated. Not because the internet wasn't revolutionary, it was, but because the infrastructure wasn't ready. Fast forward to today. The logic sounds familiar. AI changes everything, so any AI company must be valuable. But here's what's different. The dot-com bubble was about software built on existing infrastructure. The AI bubble is about rebuilding the entire infrastructure of computing itself. We're talking about physics, about power grids, about energy that doesn't exist yet. The modern AI boom really began in 2017 with a Google paper called "Attention is All You Need." But the real acceleration started in November 2022 when OpenAI released ChatGPT. It reached 100 million users in 2 months, the fastest growing application in history. Suddenly, artificial intelligence wasn't theoretical anymore. It was real, useful, and investors saw dollar signs. This is where NVIDIA enters the picture. Their GPUs, originally for gaming, turned out to be perfect for training AI. In 2023, NVIDIA's revenue grew 206%. Their stock quadrupled. Microsoft, Google, Amazon, Alibaba, and Tencent began pouring billions into their own AI infrastructure. Goldman Sachs estimates that AI infrastructure spending will reach $1 trillion by 2027. But here is the question nobody is asking loudly enough. Where is all this going to run? Here is a number that should terrify you. Training GPT-4 consumed as much electricity as 1,000 American homes use in a year. And that was just training at one time. Running these models at scale is where it gets impossible. The problem is, our power grids can't handle this. In Northern Virginia, the data center capital of the world, utilities are telling companies there's no more capacity. The wait time for a new power connection is 4 to 6 years. And then there's the chip problem. NVIDIA's H100 chips cost $30,000 each, and training a frontier AI model needs tens of thousands of them. Production is constrained, relying on a single company, TSMC. In Taiwan, a single point of failure for the entire global AI infrastructure. Now let's talk about something the earnings calls don't mention. Return on investment. The cost to train a cutting-edge AI model has gone from millions to billions of dollars. The next generation could cost over $1 billion per model. But nobody has figured out how to make that money back. OpenAI is projected to lose $5 billion in 2024, despite massive user growth. The business model is simple. Spend billions now, figure out profitability later. Sound familiar? But there's an even more fundamental problem. We are running out of new human knowledge to train these models on. Researchers estimate we will exhaust high-quality text data by 2026. After that, AI models will be training on AI-generated content, which is like making a photocopy of a photocopy. The quality degrades over time. So, what does a crash look like? Unlike the dot-com bubble, this won't just be stock prices. This is physical infrastructure. If investment stops, Companies can't raise the billions needed for their next model. Development freezes. NVIDIA's stock corrects sharply. And those half-built data centers and power contracts become stranded assets, billions of dollars in concrete and silicon that nobody needs anymore. But here's what's different from the dot-com crash. The technology eye's transformational. The crash won't kill AI. It will reset expectations. What happened after the dot-com bubble? Amazon and Google survived. The useful companies with actual business models made it through. AI will follow the same pattern. The crash will clear out the hype and the unprofitable ventures. What emerges on the other side will be smaller, more focused, and actually sustainable. If you study financial bubbles, you see the same pattern. A revolutionary technology appears. Investment floods in faster than the infrastructure can handle, and reality crashes into expectations. But after the crash, the real revolution begins. Artificial intelligence is real. The technology works. But the timeline, the profitability, and the scale of investment versus return, that's where the bubble is. The question is, can the big players solve these energy and infrastructure problems before investors lose patience? So, what should you take away from this? 1. Artificial intelligence isn't the problem. The timeline is. 2. The risk isn't that AI fails, but that it's not profitable enough, fast enough, to justify the investment. And 3. History shows us that technology bubbles don't kill the technology, they kill the unrealistic timeline. Watch the infrastructure. Watch the energy. Watch the chips. The AI revolution is coming. It's real and transformative, but it might not happen the way Wall Street is betting. The question isn't if the revolution happens, it's whether we can afford to get there. If this video changed how you see the AI boom, hit subscribe. We're diving deep into the technologies reshaping our world, following the money, the physics, and the patterns most people miss. Thanks for watching.